Hello, friends. This is Shailu Garg. I just thought to share my knowledge, learning so far in a U.S. stock market. Um, Again, I'm not a certified CPA or financial advisor, but I just thought to share some of my knowledge. What I have learned from others as well as reading few things. Because when I talk to some of my friends, especially being in a US stock market, they may be doing something in India, but then coming here, it's like I don't know the rules, I don't know how to do it or even get started. So it's pretty much similar as what things are done in any stock exchange or any stock market. The same here, obviously with some of the differences. So what we'll start with, one initial answer anyone has, especially for the folks who are on visa, right? H1 visa, L1 visa. Is it even legal to do on a H1 visa and having an income outside of your employment? So yes, it is definitely legal, right? And then all we want to do is legal and ethical. Obviously on both the fronts when anytime there is a new earning. So I'm not a immigration lawyer, but I have asked many folks, and then based on what I have heard, yes, doing any investment, especially in a stock investment on H1 visa or L1 visa is perfect or illegal because it is considered a passive income. Now, when we say a passive income, you are not actively working for that company. You hire, you have bought the stock and now you are participating in the any profit or loss of that company, which is considered a passive income and quite legal. Okay, so from that perspective, as far as one of the initial question that comes to everyone's mind, whether being on H1 or L1 is even legal to do the stock investing, yes, it is legal, right? Now the second question which comes is about taxes, right? Because the next question comes, okay, how do I make sure from a taxes perspective I'm compliant? Is it a too much hassle, or do I need to hire any CPA when it's time for doing the taxes for the next year, right? So if you are using any of your tools or software like HNR block or anything to do on your own taxes, you can quite easily do it even with the the investment or this extra investment what you have, right? So how does it actually work at the end of the year, right? Which in US it is followed as a calendar year, so from January to December, then sometime in February, actually not in January of next year, you get a form called 1099. And what the 1099 does, 1099 will actually have all of your transactions that you have done throughout the year. And then it will also list you, how much gain you have or the losses you have done, right? So it could be, and even within that, what is a short-term gain, what is a long-term gain, and we'll talk about that. What is the tax implication of that? But then any short-term or long-term also, it will, have on that 1099 form, and this 1099 will come from the brokerage firm or the firm that you have opened your brokerage account, right? Your investment account. So there is not really much hassle in terms of the taxes either. You get that form, it's clearly listed how much short term, how much long term, and then you use it to file your taxes, right? Obviously this income will be added into your any employment income that you have, so that way your total income will be considered as a taxable income. Now as far as the taxes itself, it could vary, right? So let's talk about a little bit about the taxes also, right? How exactly does it work on the capital gain? So any profit or loss that you do is called a capital gain, right? Now in capital gain, there are two types of taxes. One is short term, one is a long term. Long term is any stocks that you have held for more than a year and then you sell it, then it's called a long term. If any investment or stocks that you have held for less than a year and then you sold it, it's called a short term. Okay. And also one difference is when we say long term or short term, it's only when you have actually sold your stock. So anything which you have just kept in your account, let's say you bought a stock, year, 2 years, but you have not really sold it, right? So whatever gain you have, it's only on your books. it will not be used for any tax calculation since it's called an unrealized gain. Unrealized is something which is still sitting in your books. It has not been booked yet, right? So basically you have not sold, the money has not come to your account. It's called an unrealized. Realized is something on which the capital gain is always taxed at. Okay, so whether it's a short term, less than a year, or a long term, more than a year. Okay, now let's talk about how exactly even these taxes work. Okay, so in terms of taxes, long term when we say, so as I told you earlier, anything long than or more than a year, right? So there are different tax brackets, and you can find it on Google, right? If you put in a long term capital gain, and I'll talk about more about the merit filing jointly, because as you know, there are different status, and then the slabs that you have depend on your status also. So the long-term capital gain for a merit filing jointly. So if you look at that, there are basically three slabs. So one is called 0%, then a 15%, and then a 20%. 0%, I think somewhere around like 94,000, and 15% then goes up to somewhere around 550K, right? So when we talk about these amounts, one thing to remember is the 94,000, let's say the initial, right, 0%, it's not just the investment income, right? So let's say your investment is 80K, and then you earn 20K as an investment also. So total income is 100K. That doesn't mean that your taxes will not be calculated for that 14K which are under 94. No, the way it works is anything the total income will be calculated as 100K. Now your investment is 20K, so that 20K will be as per the slab, right? So total 94, and then on a 6,000 you will actually have to pay the 15%, okay, which is still very, very good compared to a short term. So let's talk about short term also. So what does in short term we do? Short term is your investment income is added to your employment income, and then whatever are the slabs as per the income, it will be calculated as an ordinary income, right? So if there are different slabs, 0%, 10%, 20%, 25%, 32%, that's what you have to pay taxes. So it's not considered anything different than the your employment income. One thing to remember though, there is something also called as a net interest or the net investment tax. What is that? So net investment tax is when you are having a income which is out of your investment, not your employment, and then that income, you have it's above 250K. So there is a threshold as if like 250K. Again, that is dependent on the filing status. So merit filing jointly 250K. If your total income combined, employment and investment, is above 250K, then the amount which is above 250K, you have to pay 3.8% extra. Okay, and that is irrespective of short term or long term. So yes, the taxes you have to pay, but as we say, it's good to pay taxes since that is at least reflecting yes, you are earning something, right? So that's good. So we talked about the short term and long term gains. As you understand, long term is always good in terms of investment, because as I said, the 15% limit, even if I take merit filing jointly, the 15% limit is up to I think 550K, right? Including your employment income as well. While on short term, by that amount, you are somewhere around 32-34%, right? So you are at least saving that 15-20%. So again, that was an idea of the short term, long term gain. But overall, in terms of compliance, because I know that question sometimes come, whether I'll be compliant, do I need to hire a certified CPA? How do I do my taxes? Because end of the day, we all just want to make sure that whatever we are earning, we are paying taxes on that as per the government rule, right? So, but then if you see, by getting that 1099, you pretty much are in a same where similar to your W-2 you get for employment, you get your 1099. And then you fill that information in your online, and everything will be calculated. So on that term, short term, long term, nothing really matters from taxes perspective. So yes, taking a recap, what we talked about today was, is it legal to invest in stock on H or L visa? Yes. The second question which comes to most of people's mind is, how do I make sure I'm compliant to any of the government rules, laws with respect to taxes? So yeah, you have to wait until you get your 1099. That comes sometime in February. Most of the firms will send it mid-February. Okay, so in mid-February you get 1099, you fill your form online, whatever way you do it. If you do it through someone, just send that 1099, and then that's how you calculate your taxes. Okay, so everything, I just wanted to share because those are the two initial things that come to anyone's mind, especially for the folks who are on visa, even to get started, right? The third thing which comes into mind is always the risk, right? So as we know, yes, there is a risk, there is a reward, right? In terms of investment, of there is always a volatility. It can go down, it can go up, but then we'll talk about those in our next video, right? How do you at least take some control of that, where you are not, if you are not comfortable, do not buy individual stocks. But then we'll talk about exchanges, different indexes that you can use, similar to what we call mutual fund, where you can take care of your risks as well, right? So for now, I think that's it. I just wanted to have an initial start where, for the folks who wanted to do this or start this, they may not have done it in India. But then I also know folks who probably were doing it in India as far as investment, but then coming into US, some of the legal questions, compliance question, they always take a step back before even thinking, should I even do it here, right? So there is no question as far as the compliance or legal, so that we talked about. Okay, so thank you so much. We'll keep it short for today, and then in our next sessions, what I'll also talk about, okay, how to even get started. So what brokerage firms, how do you open an account, how does it work exactly, what are the trading hours, right, that you can buy or sell a stock in US. And then we'll also talk about some of the indexes that are here in US, how to trade, and then some of the different things that are there in US stock market, which is not there in India stock market, right? So that is also very important to know the differences, because there are more opportunities, obviously, that carries more risk as well. So we'll keep it here. Thank you. Thanks again, everyone. See you in my next video. Thank you.